Witan Pacific was actually established in 1907 as a general diversified investment company. It started focusing on the Asia-Pacific region in the mid-1980s and in 2005 adopted a multi-manager approach to pan-Asian equities, and that approach is still in place today. The objective is to provide capital growth for shareholders and income growth in real terms over time. The active multi-manager strategy is designed to outperform the region's benchmark rather than to replicate it. A multi-manager approach, as the name suggests, is having more than one investment manager managing a single portfolio of equities in this case. With a global equity fund or indeed a regional equity fund, it's very difficult to find one individual manager who's able to cover such a broad spectrum of investments. Having a multi-manager approach allows us to select 2 or 3 or even 4 managers to cover quite a diverse region and to provide shareholders with long-term outperformance with less volatility than you might get with a single manager. The multi-manager approach was established in 2005 and we started with 2 managers then. Recent changes to the manager lineup mean there are now 4 managers in place and they each have their own specific investment styles. The managers in question are Aberdeen Standard Investments. They tend to buy quality stocks that they perceive to be well valued. Matthews International, who are responsible for a dividend portfolio that identifies companies that they feel will grow their dividends well over the long term. And the 2 new appointments, Robeco, based in Hong Kong, adopts a value approach, and Dalton Investments, based in Los Angeles, also has a value approach but tends to focus on smaller companies. Witan Investment Services is contracted to support Witan Pacific, and our role is to oversee the managers, to support the board in manager selection and also give them updates on global macroeconomic news as well as market news and our thoughts on the region. My colleagues at Witan Investment Services also provide operational support as well as marketing, public relations and shareholder liaison. Well, equities are not cheap by historic standards, but with monetary policy remaining accommodative 10 years after the financial crisis, this provides support for equity valuations. Corporate earnings growth is incredibly important as well, and for the Asia-Pacific region, this has been lacking in the last few years. We're starting to see corporate earnings growth coming through, and this should provide a tailwind for equity valuations going forward. Of course, politics can always upset the apple cart, as we saw in Western democracies over the last 18 months. However, in Asia, we're seeing progressive, reform-minded politicians in Japan, in India, Indonesia, all moving forward with their reform programs to cut out corruption and to improve corporate governance, which should benefit Asian equity investments over the long term.